VA homeowners who are struggling to keep up with their mortgage payments should contact their lender or loan servicer immediately. The sooner you make that phone call, the faster you can hopefully work towards some kind of resolution. If possible, proactively reach out to your loan servicer before you get behind on your mortgage payments. But if you do wind up falling behind, it's important to understand the process and your potential options. Loan servicers are required to make a good faith effort to contact homeowners within 36 days of a missed mortgage payment. Before homeowners get 45 days behind, loan servicers have to send them a few things. They have to send notice that encourages the homeowner to contact the servicer along with up-to-date contact information. They have to send examples of possible loss mitigation tools, and we'll talk about some of those in a minute. And they have to send information about how the homeowner can find a housing counselor. Lenders and servicers cannot file for foreclosure until a homeowner is more than 120 days late on their mortgage. That 4-month span, it's designed to give homeowners time to evaluate their options and file a formal request for help from their servicer. Now, active duty military members might have additional foreclosure protections under the SCRA, the Service Member Civil Relief Act. That formal request for help that you need to file, though, it's called a loss mitigation application. And getting that filed in a timely fashion is a key step for distressed homeowners. Multiple factors impact the types of loss mitigation tools that are available to you, including your income and your current financial obligations, your equity, your interest rate, your credit and payment history, and more. Depending on your circumstances, you might be able to stay in that home and get back on track with your monthly payments. So let's take a look at some common loss mitigation tools. One is a repayment plan, and this is where the servicer creates a new monthly payment plan that includes both the regular mortgage payment and a portion of the missed payments. There's also forbearance, and this is where the servicer reduces or eliminates the mortgage payment for a set period of time or otherwise gives borrowers time to repay what they owe. There are also loan modifications, and with these, the servicer could permanently alter your loan terms by adding what you owe in late payments to your principal balance and then creating a new monthly mortgage payment. Now, there are also a couple of common options where homeowners don't get to keep their home. One is a short sale, and this is where the servicer basically says, we are going to let you sell that home for less than what you owe us. There's also a deed-in-lieu of foreclosure, which is commonly just called a deed-in-lieu. And that's where the servicer allows the homeowner to give back that home rather than having to go through a formal foreclosure proceeding. It's important to understand that some loss mitigation tools might negatively impact your credit and your ability to buy a home in the near term. And some, like a short sale, might also come with income tax implications. Keep in mind that every loan servicer and every homeowner situation is different. The earlier that you reach out to your loan servicer, the sooner you can better evaluate your options. So now let's talk a little bit about timelines. Remember that you've got this 120-day window after your first missed mortgage payment before a servicer can move to foreclose. Now, additional timelines can come into play once a foreclosure sale gets scheduled. Mortgage lenders have 30 days, so they've got about a month to review a homeowner's loss mitigation application. Homeowners who submit a completed loss mitigation application at least 90 days before a scheduled foreclosure sale are entitled to a few protections. One, the servicer has to give them at least 14 days to either accept or reject any offer for foreclosure avoidance. Two, if the servicer denies a loss mitigation request, borrowers have the same span. They've got 14 days to file an appeal. Servicers who receive a completed application at least 45 days before that foreclosure sale, they're required to tell homeowners that they've received an application. Servicers who receive incomplete applications have to explain to homeowners what information is missing. They can't just leave them in the dark. Servicers are also required to evaluate your application and consider alternatives to foreclosure, provided you submit a complete application before it's too late. This is really important to understand. Servicers are not required to offer you any of this. They're not required to offer you an alternative to foreclosure, but they do have to explain their denial in writing. Now, that timeline that can come into play, homeowners who submit a completed loss mitigation application 37 days or less before that scheduled foreclosure sale might not have the same protections when it comes to foreclosure avoidance options. Again, talk with your mortgage lender or your servicer at the first sign of trouble. For homeowners who have VA loans, their first call should still always go to that loan servicer. But the second call can go straight to the VA Loan Guarantee Program. The VA has a team of foreclosure avoidance specialists who help to advocate with servicers on behalf of VA homeowners. Those specialists encourage lenders to offer foreclosure avoidance options and help veterans keep their homes. Those efforts have helped hundreds of thousands of veterans avoid foreclosure over the last few years alone. VA homeowners in need can contact the VA loan program directly at 877-827-3702. Now last, and this is also really important to talk about, homeowners having trouble making their payments need to keep a close eye out for mortgage scams and mortgage scammers out there. Loan servicers and HUD-approved housing counselors will not charge fees to help you. But foreclosure prevention has become a ripe target for scammers in recent years. Be wary of companies or people who are offering to help you for a fee. And never send a mortgage payment to any company other than the one that's listed on your monthly mortgage statement or one that's been designated to receive your payments under a state assistance program. So let's look at a couple of signs that you should really watch out for as you're heading through this process. One is look out for anyone who's asking for fees in advance to work with your lender to somehow help you. Look out for guarantees. Look out for anyone who says that they can guarantee you that they can stop your foreclosure or get your loan modified. Be wary of anyone who advises you to stop paying your mortgage company and start paying them. Also look out for anyone who pressures you to sign over the deed to your home or to sign any paperwork that you haven't had a chance to read or that you don't fully understand. Also be on the lookout for anyone who's claiming to offer a government-approved or an official government loan modification. And also be wary of anyone who asks you to release personal information online or over the phone if you don't know this person or if you haven't been working with them. If you suspect there's a mortgage scam, you can report it at preventloanscams.org or call 888-995-4673. Remember, contact your mortgage servicer at the first sign of trouble. There are a lot of options out there to help homeowners avoid foreclosure. The sooner that you raise your hand for help, the better.